Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Katie Jensen. After Silicon Valley and Signature Banks both collapsed in early March, experts were worried about ripple effects in the rest of the banking sector. Well, so far those financial problems aren't trickling up to the biggest banks. And mortgage activity is one reason they're outperforming expectations. Today, it was Bank of America, whose net income of $8.2 billion is up more than 15% from this time last year. The company says this is partly because residential lending helped drive an overall 5% bump from 2022 in loans and leases. New mortgages were down from the fourth quarter, but home equity lending remained flat at $2.6 billion. On Friday, both JP Morgan Chase and Wells Fargo also posted better than expected earnings numbers, and mortgage activity was again a driver. For JP Morgan Chase, home lending was up nearly 25% from the prior quarter. For Wells Fargo, that number was up nearly 10%. Wells Fargo continues its exit from the mortgage industry, laying off hundreds of mortgage bankers in February. Meanwhile, United Wholesale Mortgage is offering a down payment assistance program as a way to drum up more business. But we continue to hear from originators who say the aid will do little to help low-income homebuyers. UWM is offering $4,000 of assistance, but the program is only open to borrowers who earn less than half the area median income. In our flash poll over the weekend, only 13 of 121 originators who responded say they have borrowers who could qualify. That's only 11%. UWM maintains the program will help borrowers who have been priced out of the market. If a homebuyer makes a 1% down payment, UWM will add another 2%. But most originators who responded to our poll say borrowers who meet the income criteria won't be able to afford a home. Even if they have income to afford a mortgage, Bill Thorpe of VRB in Florida says the prospect of a first-time homebuyer having little to no debt service is unlikely. Some originators also pointed out UWM's previous 1% down program had a higher threshold limit. After the break, borrowers are willing to rebuild their credit if you show them the payoff.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. We all know that the interest rates are based in part on how risky each borrower is. So how are you helping them make their credit profile look as good as possible? We've got an NMP webinar this Thursday on how to do just that. Our own Mike Savino has more.
We're in extraordinary times where the market's going a little bit crazy.
Homebuyers need every edge they can get in today's market, and you can help them find one. Improving their credit scores is one way to get a lower rate. A new study by Credit Expert found that only 46% of potential buyers are trying to fix their credit score, but 87% would do the work if it got them a better rate.
We know a lot about what makes people's credit scores go up and down.
Credit Expert is doing a webinar Thursday with NMP to talk about its study and how originators can use this information to target home buyers. Among buyers who want to fix their credit, the majority want to do the work early in the process. You can help them.
We were founded a little over 20 years ago, and we've been doing nothing but analyzing consumer data.
Credit Experts Mike Darn and Hangar 6 Consulting founder Dan Green will talk about how to build a credit-first strategy, because helping your borrowers improve their credit profile gets them a better rate, and they'll likely become a great referral source.
We've looked at what type of borrowers are going to be in market this year, and we're going to be bringing insights to the attendees around what those borrowers look like.
The webinar begins Thursday at 2 p.m. You can sign up at nmplink.com/creditexpert. That's expert without the E. Reporting for The Interest, I'm Mike Savino.
Coming up, the IRS is upping its focus on wealthy taxpayers.
Network with more than 2,000 attendees in Irvine for the California Mortgage Expo, May 3rd and 4th. From San Diego to LA to San Francisco, no one does it like we do. Sign up now at camortgageexpo.com.
Welcome back. Here's what else is interesting today. We all know it's tax day, but what you might not know is the IRS intends to use $80 billion in new funding to start cracking down on the returns of wealthy individuals and corporations. A report from the IRS found that taxpayers earning $1 million or more were subject to an audit rate of just 0.7% in 2019, a sharp decline from 7.2% in 2011. That means a person making $20,000 was more likely to be audited than a person making $400,000. The initiative to beef up the IRS is all part of the Biden administration's effort to make the tax system more fair. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.